here. So we'll kind of go ahead and get started here in the interest of time. We try to keep this to about 45 minutes. Yeah, really excited for September's Matt's chat. So for those who've participated on one of these before or have attended, you sort of know the flow. But for anyone who's new, this is really a webinar series where I like to bring together supply chain experts, e-commerce experts and brands, as well as sort of logistics tech professionals for a conversation, kind of a panel discussion on the latest news in logistics and fulfillment and all sorts of topical stuff. So really excited for today's session. Three good friends of mine, experts. We have Kyle Thompson, the co-founder of Encore Fulfillment. We have Dipti Desai, the CEO and co-founder of Crstl, and Sean, how do you pronounce your last name?
Agatep.
Agatep. Okay.
Yeah.
Agatep.
Yeah.
Pretty close. The co-founder and CEO of Vincero Collective. So I'll let each of the panelists also introduce themselves, share a little bit about who they are, what their businesses are focused on, what they're working on, and then maybe we can dig into a couple questions. So maybe we'll go Kyle, Dipti, and Sean. Feel free to take a minute or so to share a little bit about who you are and what you're working on.
Yeah, so Kyle Thompson, located in Oklahoma City, which I like to call North Dallas for all those around the country, and co-founder of Encore Fulfillment. So we are fast, flexible, very accurate 3PL for high growth brands, focus on D2C, wholesale, mass retail. And really, we want to be the operational engine of our partners to help them scale their business. And so we've been in business 14 years, have 300,000 square feet here in Oklahoma City, and are growing, doing a great job for our clients. So.
Cool. Matt, thanks. Thanks for having me. Great to see some familiar faces as well in the attendees, or names in any case. But my name is Dipti Desai. I'm the CEO, co-founder of Crstl. Crstl is a modern B2B commerce network, and we connect buyers and suppliers, as well as integrate with their ERPs and WMSs. We focus today largely on EDI, API, et cetera. And we're very excited to be building in the space and love working with Matt, Kyle, and by extension, a lot of different brands, manufacturers, and logistics providers in the space. So that's a little bit about Crstl.
Very cool. That leaves me. I'm Sean Agatep. I'm one of the founders of Vincero Collective. We're a men's accessories brand. We sell watches, eyewear, and jewelry with a heavy emphasis on gifting and personalization. And I started the business with my best friends from college. We started in 2014 off Kickstarter, actually. So we've been running and scaling it ever since. That's about it.
Awesome. Really fun backgrounds. I think most of you know me, but our marketing team always gets upset when I don't introduce myself, because they remind me that some of, between the three of you, you've also brought in guests who may not know who I am. So Matt Hertz, the founder and CEO of Third Person. Third Person is an AI-powered platform that helps connect e-commerce brands with 3PL providers. So we work with folks like Kyle and his team at Encore Fulfillment, a really great partner of ours, as well as a couple hundred or several hundred other 3PL partners. So really excited to bring together these three guests and talk about different things going on in the world of e-commerce and fulfillment. And certainly there is a lot going on right now. So maybe we'll start with kind of the first question on my mind. Something that's very topical. Maybe I'll kind of guide this initial question to either Sean or Kyle, but really we'll love Dipti to weigh in as well. But obviously we can't have a webinar talking about logistics and e-commerce without talking about tariffs. And gosh, I think yesterday while I was flying, there was news out that the Supreme Court will be weighing the potential tariff decision. I think in November is the latest I heard. It might take them a month or two to actually come to a decision. But I posted something over the weekend on LinkedIn from Polymarket, which is like a betting site, for lack of a better word. And I can post the link to it in the chat here. But I'm looking at it right now, and the probability that the Supreme Court overturns overturns Trump's tariffs is now at 54% chance. So it's basically a coin flip, which is remarkable. And there's, literally millions of dollars being bet on this outcome. So it's, rather statistically significant. So without digging too deep too quickly, curious, maybe start with Sean. Given you have a e-commerce brand, and I'm not sure where you're currently producing your stuff, maybe it's all made in the US, and tariffs are a little less relevant to you, but if you're like most other brands, there's at least a part of your business that's sourced from overseas. So curious what you're seeing. How big of an impact have tariffs played a role in your business? Maybe what are some things that you've done to circumvent that? I'll kind of give it to you to weigh in on that.
Yeah, well, we have a little bit of a unique perspective. I actually lived out in China for 5 years. So the story behind Vincero is we had moved out after we graduated college, started doing product development, sourcing, and manufacturing, and started our own brand. So we have a little bit of a unique footprint in China. We've got sort of a local presence out there. So the stuff with tariffs, honestly, at this point from the brand side, it's kind of feels like the weather, right? Like you can't control it. Like it's just going to happen. Like you kind of have to go with the ebbs and flows with it. And the more you try to plan for it, the more it's going to change. So for us, we've put more of an emphasis on simplifying our SKU catalog, really focusing on the best sellers and where we have the best margin, so we can eat prices as they influx and change. That's been the biggest strategy for us. And from the ops and logistics and demand planning side, it's the thing I've loved the best, because for years I've been shouting that we have too many SKUs, that we only need a handful. And there's the conservative play now to where it's like, okay, maybe we should refine the catalog. And it's also changed a little bit on our strategy and how we're launching new products. We're in a fortunate position for us where jewelry is growing very aggressively for us, and margins. And as you're opening up new product categories, you kind of built in more of a margin expectation, as opposed to like trying to salvage an existing margin profile for existing product categories.
I love that. Kyle, you work with a lot of e-commerce brands. So you probably have seen, the gamut of, businesses that are, insulated, and others that have, really struggled. I think I saw a stat from Ship Hero. Aaron Rubin at Ship Hero had posted the week, or I guess the month, or the Tuesday after Labor Day. And I saw this from other sources as well. And Kyle, I don't know if you use Ship Hero or if you use a different WMS, unimportant right now, but although I would love to know. But yeah, he had posted a stat that sales over the Labor Day weekend were up, I think it was 10%, to that effect year over year. So really, really fascinating to see that, despite all the, presumably all the headwinds and all the uncertainty, e-commerce is still alive and strong, and growing significantly, let alone what we see coming out of Shopify, where in their, merchant ecosystem, I mean, they're growing, was it 25 or 30% quarter over quarter, at that scale, right? To the tune of hundreds of billions of dollars. So Kyle, what are you seeing with your, network of brands that you support at Encore?
Yeah. So, we continue to see really strong volume, which is, it's really interesting. And Sean, the weather analogy is like, it's very apt, because it's like, this is the most disruptive year that there's been for e-commerce and logistics since COVID, and probably for the last 15 or 20 years, if you look at it. Like what the tariffs have done to the situation, the end of 321, it's really interesting how everything is kind of coming together, and nobody knows what's going to happen. It's a coin flip what the Supreme Court's going to do with the tariff situation, and then the government's going to have to refund, billions, not trillions of dollars, billions of dollars. Trump's saying trillions, it's billions. But we continue to see really strong demand, really high volumes from our clients. I will say the thing that I have noticed the most is clients that are becoming brands are becoming a lot more cost conscious. And so that means eliminating long tail SKUs like Sean was talking about, really focusing on best sellers. And then, there's been a lot of, over the last 3 years, there's been a lot of tech that has helped brands really dial in and know their numbers on the marketing side. And I think we're starting to see that a lot more on the operational side as well. So brands can know what their true numbers are, what their fulfillment cost is, what their total, help them dial down to what their net profit and their best selling SKUs actually are. So we're seeing I think the people that are running really strong brands today are really strong operators and are bringing a lot of like business analytics to the table when they're running their business. So
Have you seen any change, Kyle, maybe from sort of inbound leads you've gotten, or any current customers who have shifted fulfillment from a non-US country, the UK or Australia or a market like that, where they were shipping into the US to a customer? Have you seen sort of a rise in leads, in your business, to the, from these brands who are looking to move fulfillment to the US in lieu of shipping, via de minimis from overseas?
yeah, we have seen more demand for that because the 321 is no longer really a viable option. There are some workarounds that people are deploying. I don't know how long those loopholes are going to be out there, and it's still a very long window when it comes from fulfillment from another country into the US. And then it's a coin flip on whether that stuff will get through customs with all the changes that USPS is making. And so we have seen quite a few inbound leads with people that just, the safest best bet for a brand right now is to be fulfilling in the US with where the current administration is at. So we've been able to help a handful of brands come on board and have a presence here in the US.
Yeah, I agree with that. And Sean, would love to kind of hear about your sort of fulfillment setup. But yeah, Matt's opinion here is that I echo that sentiment, Kyle. I think given the changes to de minimis, which whether we call it a loophole or whether we call it just a arbitrage opportunity, it's 6 of one, half a dozen of another. But now that has gone away, the reasons to ship to US customers from a place outside the US makes a lot less sense, a lot less. And given where the current administration, the Trump administration's feelings are towards sort of this, made in the US, onshore, et cetera. And frankly, like having profit live in the US versus another country is definitely the safest bet. So yeah, it's great to see that you've had some demand there. Dipti, I know you're not directly focused on the fulfillment side of the house, but you certainly work with a lot of brands that are selling, or your customers are selling through all sorts of channels, both direct to consumer, the Shopify's and the Amazons, as well as the biggest of the big box retailers, right? The Walmarts, the Targets, the Best Buys and others. So curious if you've seen, as a function of, changes to like tariff policies and de minimis and all that, if you've seen kind of shifts in how your clients are shipping, right? Are there certain channels that have become more popular? Yeah, what are you seeing, in your ecosystem of clients?
Yeah, definitely. Very much echo sort of what Kyle you said, and Matt, what you were pointing out in terms of some of those patterns. And then broadly, more focus on lowering total cost of ownership for any system, any service, has been a big focus. And also what you said, Matt, earlier is an emphasis on operational excellence and being more numbers driven. So I think those are, just broadly speaking, those are some of the shifts that we're seeing.
That's great. Yeah, and Sean, I'm actually just poking around on your website now, and yeah, I didn't know that you had sort of bracelets and necklaces. I know your watches, right? I think that's kind of what you guys were famous for, and probably your hero product today. But I'm curious from your, obviously feel free to share what you're comfortable with, but curious to kind of understand like what your fulfillment network looks like today. Is it mostly in the US? Are you fulfilling yourself? Do you work with a third party, a 3PL? Yeah, we'll love to kind of learn about that.
Yeah, so we've been through the gambit. At one point in time, we had like 4 fulfillment centers across the world and did everything like that. In the past few years, we've just simplified everything. We've got one 3PL out of New Jersey. We do a lot of personalization and engraving, so we need laser engraving and the ability to be able to customize everything we do because gifting is such a large presence. So in a way, I don't know, I think it's a tough time for brands that are trying to aggressively scale despite the headwinds. We're at a life cycle of the brand to where we're comfortable with the stage of growth it's in, we're comfortable with the rate of growth, and we're comfortable with just everything being simpler. So the brands that were kind of over their skis a little bit, that I've been talking with trying to take advantage of all these different things to try to be able to grow and scale and all these hacks. It's more challenging for them. We're just, from the Vincero side, it's just a simpler shipping profile, right? Like we air freight everything in. We have watches and jewelry are very easy to ship. They're small parcels, so yeah, it's pretty simple profile.
That is interesting that you're using air freight. I mean, I guess it makes sense just given that you can put a lot, stack a lot on a pallet or in a container. And I think from a cash flow perspective, while air freight obviously is more expensive than container shipping, you're getting product, to the US 4 weeks faster.
Right.
And that sort of helps with your speed to market. Yeah, that's great. I just put in a chat here to those listening. Well, I've posted each of their LinkedIn profiles so you can link to them and connect with them offline. But also, if you have any questions for the group, feel free to, well, I guess you can put them in the chat, or there's a Q&A tab on the bottom, which you can put them in. We can answer them in real time or answer them at the end. But I guess we do have a question here, so we will get to that. The question is for Sean. Was there a cost simplicity trade-off, especially when it comes to last mile shipping?
Yeah, that's a good question. We started to just have to charge more for shipping, and instead of having a few different shipping classes and trying to game the best way to deliver to customers in all these different areas, we simplified our shipping classes and started charging more for shipping because it just costs more. There's no complexity there. It's just instead of having 3 or 4 different rates, we've got like 2 that we run with.
Yeah, I like the simplicity approach. And I mean, gosh, like I think you said you were working with 4 different fulfillment centers. That's a lot. That's a lot to manage.
Yeah. And we weren't big enough to justify that, right? That was the other thing too, is understanding our size and the scale that we needed. It was like, okay, if we simplified all of this, we would have way better control, to Kyle's point as well, of just better control of our numbers, better control of all these variables, less that could go wrong.
Yeah. Kyle, I know you mentioned at the top in your intro that you're in do you say suburb of Dallas or North Dallas in Oklahoma City? I get the question a lot of like, optimizing or, picking the best part of the country to fulfill out of. Sean is fulfilling out of, I think you said New Jersey, the Northeast. Obviously, there's a lot of population there. That makes a lot of sense. You're in the more kind of central region of the country, and we work with a handful of 3PLs that are kind of in that Missouri, Oklahoma, even Dallas area, and it makes a lot of sense because of its sort of central proximity to a lot of the population. So as you're kind of educating maybe prospects or potential clients on Oklahoma City, which is, maybe I'm stereotyping a little bit, but it's probably a place that many have not been to, right?
Yeah.
Versus, a New Jersey or a Chicago or a Dallas or a Southern California, using air quotes here, a more traditional market for
Yeah.
fulfillment. But, given that I understand why your region is a really attractive region to fulfill out of. So, maybe like what are one or two or, a couple points that you're sort of telling, prospects and clients about, the optimization and kind of fulfilling out of, your region of the country.
Yeah, so it all starts with shipping profile. So one, we look at order mix and see where the order mix is, and then so if a client has 50% of their orders that are going to the Northeast, then we're probably not a great fit for them, and they should probably be fulfilling out of like New Jersey. But a lot of clients are fulfilling nationwide, and usually the top states are New York, Texas, and California. If you're looking at like the order mix. And so what stands out if you're shipping from a central state like Oklahoma, Missouri, Texas, is that our zones are very competitive in that we don't get a lot of the higher zones. Like when we look at our order mix and where we're shipping for our clients, I think only maybe 5 or 6% is above zone 6. And when you start getting into those higher zones with the carriers, that's when the cost really starts to go up with the carrier, and then also the time in transit. Now this is especially like important when it comes to like the regional carriers, because that's the main, like with some of these new discount carriers or regional carriers that are in this space, is that the main complaint with those carriers is that when you get a really long zone, like if you're shipping from New Jersey to California, it's like zone 9, you could look at like a 7 or 8 day delivery time. But if you're centrally located, you don't necessarily have those really high zones. And so the transit time is much more reasonable, in line with what the consumer is expecting. So if you're looking at just like a simplified approach, which I'd argue makes a lot more sense for a larger portion of brands than people think. Like everybody thinks you have to be multi-node, like Sean was talking about. But then if you really look at the benefits of simplifying the operation and not having to carry extra inventory to have multi-node, like the central US is a great place, depending on the order mix, to do the fulfillment from.
Yeah.
Yeah.
Yeah. No, for sure. No, that's great. And yeah, it is interesting, right? Because when you think about the US population, unless things have changed in the last couple of years since I've been kind of saying this soundbite, about 2/3 of the US population is kind of east of the Mississippi, right? So like almost, directly down the center of the country, 2/3 of the population would be on the eastern half of that. So, that's why, to your point, Kyle, being in that corridor where you are does make a lot of sense. Obviously, if you're selling, swimsuits or surfboards, it might make sense to be in a location that's, more coastal centric, right? In, Southern California or whatnot. But if you're a typical or servicing a typical e-commerce brand, and I don't mean typical to sound like a pejorative, but a brand whose distribution kind of follows the population pockets in the US, which
Right.
maybe Sean, your brand might look more similar to that. It certainly makes sense to, be in that central region. Dipti, I want to go back to you because you're working on something that is, in my eyes, very, very complicated, almost very scary, right? Like EDI. So, and love your approach is, you are, this probably doesn't do it justice, but you are a modern EDI company, right? You're not one of these kind of old school, again, I get scared when I think of EDI and the number of 3PLs I've worked with, way back when, that were using EDI, and it was a really difficult integration process. So, I'm curious, like from Crystal's perspective, like what does good communication look like between an EDI company, or Crystal specifically, and a 3PL and a brand, right? Like it is sort of that three-way communication. And I love that there's a stakeholder from a brand and a 3PL on the call. So I mean, I guess I'm just curious, like, what has made Crstl so successful and able to pick up such great traction among brands in your first few years here?
Yeah, still, yeah, definitely relatively early days, even though, in startup is dog years too. So definitely feel a bit of both. But I think fundamentally the approach we've taken is first and foremost, before we even started building, before I even architected kind of that first version of what became the Crstl product and the Crstl platform. Obviously, I think you know this, Matt, but for the broader audience, my background is in building data products, right? Data software products. And with EDI, it was like any other data problem where I first studied, obviously I knew about it and had worked with some parts of it in the past. But really sort of took a fresh look, a first principles kind of approach in terms of what is it, why is it, not been why has it been brittle for so long? What's changing in the world that makes it more relevant or less relevant, right? Like, so it was just, I gave myself a lot of homework, if you will, at first, and really sort of jotting down the questions and then searching the answers, right? So I think there was a lot of kind of that sort of thought and work that went into it first. And obviously, didn't do it sort of holed up in a room, spoke to a lot of very sort of smart practitioners and people who had a lot of scars and insights and wisdom to share, right? So really had my perspective, but also really sort of developed it and honed it by talking to a lot of people on the ground. And I think some of that or a lot of that, hopefully shows up in the product and in terms of how we build things and the things we chose to add to the product and the things we've chosen to not add to the product and the platform just yet, and so on and so forth. So it's a little bit of a cliche, but it's really deeply understanding the workflows and the pain points before getting too excited by any particular feature or AI or API or any sort of bias of that sort, if that makes sense. And so from a connectivity mechanism, I think it's just really important for everybody to internalize that, in 2025 and now almost 2026, sort of digitization is not optional. It's an adapt or perish sort of a timeline that we find ourselves in. And EDI, for what it's worth, I always say it's a language and it's a protocol, and it's sort of orthogonal to the connectivity, right? The connectivity is, API, much like, with APIs even, it's like, is it REST? Is it GraphQL, right? Like there's many different flavors and philosophies that go into, building an API even. So it's the same thing with EDI, and whether you're connecting via ES2 or WAN, and, these are all sorts of sort of the English language analogy is what I use the most often, which is the English language gives you what? It gives you a bunch of rules for how you construct sentences and questions, right? It says nothing about once you've constructed a given sentence or question, are you texting that question? Are you handwriting that question? Are you sending an email with that question or sentence, and so on and so forth, right? So I think for that reason, really understanding kind of the difference between what's a protocol and a format versus what's a connectivity, and the importance of up-leveling systems to really sort of adapt ourselves to this, again, cliched as it sounds, but the world's changing very, very fast. And so, and the best systems, the best businesses are going to be interoperable and hyper-connected. And so just up-leveling all around is the name of the game, I think.
I love that. Kyle, what are some of the challenges that you see your brands facing the most? I know we've talked about tariffs, so maybe kind of leaving that one aside. Like, is it like technology? Like, is it sort of EDI or connectivity broadly? Is it trade compliance? I don't want to lead the witness, but yeah, like what are some of the other things that you're seeing your brand struggle with as it relates or sort of intersects with your world and your responsibilities?
Yeah, so I would say, especially when they get into the wholesale and are shipping to large retailers, like it gets really complex. So Dipti was talking with people that have scars from working with EDI. And it can be daunting to learn how to break into wholesale, learn what that means for, your forecasting for inventory. It works different with different vendors, whether that's Target, Walmart, Dick's, the gauntlet. And so really when you're scaling that brand and you add that complexity of wholesale is where we see brands really take on a learning curve where they have to get a lot of knowledge fast. And if they don't have the right information, it can really hurt them if they've over ordered or they misunderstood what, the routing guidelines were. And that's where we try to come in and partner and help the brand understand what the requirements are going to be, depending on the vendor that they're shipping with. And hopefully we have a good EDI partner like Crstl, like Dipti, that can help us along the way. But that's outside of tariffs, I would say that is the biggest one, is when the brands are trying to go wholesale, or mass retail really, and figure out what that means for their brand. Is one of the biggest challenges that we see today.
Yeah. Sean, I'll ask this next one to you, but Kyle, you might also want to chime in. But yeah, Sean, like how are consumer expectations evolving around, shipping and delivery? We talk ad nauseum about, kind of the Amazon effect and, same day, 1 day, 2 day. There's been a kind of a wave of, modern carriers and couriers, and, there's companies out there who, help 3PLs and brands kind of leverage, alternative carriers and regional carriers. So, like, are these companies that you're using, with your current 3PL? And I guess just broadly, like, how do you think, as the COO, you're obviously responsible, or you have a team that's responsible for kind of that delivery experience. So, like, what is your philosophy on like fast shipping or, quick shipping to customers?
Yeah, authenticity. Like, I think that's what we try to communicate to customers. With our product, a third of our products are personalized and engraved. So there's already a lead time there to be able to engrave those and build that out for customers. So with shipping volatility and pricing and everything like that, that's one of the reasons why we simplified the shipping carriers and classes that we have, because then it's known, okay, this is the expectation that we have and this is what we can deliver on. And being able to authentically communicate that to customers of just, listen, like, we're trying our best. This is just what the expectation is. We are not an Amazon. We are not a product that can quick ship that you can get there the next day. If you want a product like that, like, we're just not you. And being able to effectively communicate that allows I mean, authenticity leads to simplicity, right? Like, that's kind of just like been the philosophy the past couple of years with the team.
Yeah. Yeah, I love that. Kyle, what do you like? I mean, you work with dozens of brands and they all have different shipping policies and expectations. So if you kind of like threw it all into the hopper, what would it kind of yield in terms of like, the average or the typical, delivery experience?
Yeah, I think, I think the authenticity point is a great point. Like, the consumer wants to know what the expectations are as far as how quickly something's going to arrive. But I think there's, the Amazon effect of a couple of years ago where it had to be 2 day. I think we're seeing a softening of that, where people, as long as it's effectively communicated in cart, whether it's 3 days to 5 days, that's when, the consumer, I don't think we really see that much of a conversion drop from that happening. And then, so I think if you looked at the brands that I'm working with today and kind of what the sentiment of the market is, and the reason that there's a bunch of regional carriers and discount carriers that are coming to market, is because that 2 day delivery expectation has softened to where if the consumer knows it's going to arrive and they know that the general time frame of when it's going to arrive, and it's with a carrier that they can trust, then it's a viable option. I will say that this year for brands and for the consumer, I think it's the year that there's been the most downward pressure on pricing and competition in the carrier market that I can remember in this space. I mean, we have UPS and FedEx, and then USPS, who have been the major players this, for as long as anybody can remember. But now we have Amazon entering the space, and then a bunch of regional and discount carriers that are entering the space, and they're all fighting for market share. And I think it's a really good thing for brands and for 3PLs and for the consumer, because I think it's going to drive down prices and then also create a better product. So.
Yeah, no, it's been great to see the competitive pressure, and UPS and FedEx still have significant market share, but it's changing quickly, right? And I remember as recently as 10 years ago when I was living in California, and OnTrack was kind of the California regional carrier. They were little known, and OnTrack has obviously done a lot over the last few years in acquiring the East Coast competitor Lasership, and I think just yesterday or the day before they announced that they're coming out with an express product, and now they're no longer a regional carrier; they're basically a national carrier, right? They can service, I think, all but maybe 2 or 3 states, within the lower 48. So maybe it's 5 or 6, but they can service most of the population. So they've come a long way, and yeah, as you said, Kyle, I mean, it's great for customers to pay less and get equal or better service in many cases.
Right.
Dipti, a question for you. I know we only have a few minutes left here, but and I'm sure you can talk for a long time on this one. But just in the last week, we've seen a couple really big headlines of broadly AI companies in the logistics space raise a lot of money. Augment, which was founded by Deliver's founder Harish Abbott. I think they raised 85 million, 80 million, a lot of millions. And then Happy Robot also raised a pretty big round. I think that was about 40 million, totaling about 130 million in total. So, given you are also in the sort of logistics tech space, like clearly there's been a huge push by investors and frankly entrepreneurs in building AI solutions in logistics. So, like, what are your thoughts on what's happening? We're all aware of AI, but there's been a lot of interest, particularly in logistics. So, and I know you raised some money earlier in the year, in part from Shopify, which must have been super exciting for you and the team. So, yeah, what are you seeing as it relates to kind of investment in the logistics, tech and AI space?
Yeah, great question. I mean, my view is rising tides lift all boats, and so that's great for the space. And I think logistics is probably, if I'm just sort of imagining myself in some of those rooms, it's probably also seen as sort of that last frontier where AI can really come and disrupt and make an impact, right? So I'm obviously excited for these companies, and more excited to raising money is really the start, not the end. And so excited to see sort of how they allocate that capital and the products and the services that they bring to life in the coming months and years. I think there's also, I was thinking about this a little bit the other day before today's webinar, is it's also interesting to potentially see a lot of these companies turning into robotics companies, if that makes sense. I mean, even when you look at what's a little bit topical right now with Elon's, comp structure and things like that. Obviously, I don't know too much about it, but just from reading in the news, I think it's sort of hinging on and betting on Tesla becoming a robotics company in the future, right? So I think there's something just generally very interesting happening in the macro. So yeah, definitely exciting to see. I think it's long overdue, the recognition and the investments and the backing. So yeah, I'm excited to hopefully these companies go make a dent in the universe.
I love that. Yeah, a huge supporter of the rising tide lifts all boats. It's another JFK quote, I think. I think so, right? It sounds like it's something that JFK would say, or Einstein, someone.
JFK or Abraham Lincoln, one of those two.
Yeah, exactly, right. Just in the couple of minutes we have left here, I do have one more question. Maybe I'll kind of pose it to each of you kind of in rapid fire, but like what is the most, or one of the most underrated investments that a brand can make to avoid supply chain headaches?
I'll go first. Investing in the infrastructure to understand your numbers. That's been, I think, the biggest learning is when brands are scaling. And I think it's changed a little bit. When we were scaling Vincero aggressively, like the last thing people thought about was ops and logistics, and that because like there was just a whole lot of more margin for error. But understanding your numbers, understanding the metrics and everything like that will is the most impactful thing for us, especially on the ops and logistics side.
Love that.
I mean, selfishly, I want to say find a 3PL partner you can trust and can scale your business. But I'll
Hey, it's a great answer,
Sean,
right? Yeah.
I'll echo what Sean said is that, I mean, that's a piece of it, but then you have to work with that 3PL and know the full picture of your ops and what your numbers truly are so that you can price and scale effectively as you're growing the brand.
Yeah, definitely. Yeah, definitely echo that. I think just having a lot of discipline around numbers, and related to that, which is probably also related to what Kyle is describing, is actually also having folks on staff who understand operations. I can't tell you how many times we get a support ticket from a customer, from a user who says, I just started last week and I am now been charged with filling out this shipment notice and I don't understand anything. I've never done retail fulfillment before. Please don't do that. This is serious. You're serving your customers. Please take it seriously. Please make the investments. Yeah, that's what I will say.
I love that. Yeah, I would agree with all that. Yeah, the data, especially now with things changing so quickly, and you know, small changes can have big impact. It's now more than ever important to really understand, you know, the economics of your business and you know, all the different facets of one's business. And certainly finding a great 3PL partner is an important decision. You know, as I say all the time, it's kind of like a marriage, you know, the relationship between a brand and a 3PL. So just like you want to find, you know, the right person to marry, you know, as a brand, you want to find the right 3PL to work with. So thanks everyone for joining today. This has been a really fun conversation. Thank you, Sean and Kyle and Dipti, for taking some time out of your days. We have recorded this, so we'll be sharing it afterwards over email. It'll also be on our YouTube channel. So for those who couldn't make it but registered, which is many of you, you will get a recording. But thanks everyone for joining, all the attendees, and thanks to the three of you panelists for contributing your insights today.
Appreciate it.
Thanks, Matt. Appreciate it.
Thanks, everyone. Thanks, Matt. Bye.
Thank you.
Thanks, guys.